Welcome to the weekly swing low. It's February 7th, 2025. We're going to do our update on our usual tickers. They're here in this order. We'll start with the big indices and then we'll move on to commodities, Bitcoin, etc. Let's start with SPY as we usually do. We'll focus on risk levels. And I would say overall, really interesting that last week, thinking of SPY, let's look at the daily chart. We talked about how 600 was your line in the sand. And interestingly enough, we're closing right around there, just above 600. So this is our Friday candle. So the market is closed. Last week's update we did right before the market opened on Friday. And look what happened, right? We were talking about this pattern we talked about this pattern in that update. It's an outside candle, a really, really important concept to understand. Sometimes price makes a higher high and then it goes on to make a lower low. And sometimes it makes a lower low, then goes on to make a higher high. Really important to understand so you don't get caught on the wrong side of it. In this case, that Friday it was bearish. And what do we have this Friday? That's kind of isn't that interesting, right? The market did literally the same thing. To be fair, this was actually not a bearish outside candle because it didn't quite make a lower low. But what did it do? That's next day it came in and made a massive lower low. We talked about that, the compound outside candle. So these two candles combined are a bearish outside candle of these previous candles. In fact, really this whole range. So most importantly, we really haven't gone anywhere for the last couple of weeks. And you'll see that on the weekly chart. If you think about where we are potentially in a daily cycle, so this was a big move for 46 days. We topped out on day 23. So think about what that means. We had a rally for 23 days, and then we had a decline for exactly 23 days. So not quite left translated, but as close as you're going to get without actually being left translated. And then we had this nice rally up, which topped out on day 8. That was January 24th. And since then, so just to be like crystal clear, all of this action is a swing high below the low of this candle. So this candle marks the high on day 8, that high at 610.78. The low of that candle is 606.80. That's an important level. We poked our head above that, right? Look at this little wick. We poked our head above that, and then what happened? We failed quite dramatically. Today was also non-farm payroll day. So what happened after we made this bearish outside candle? We made a lower low. And so here, the odds are we make another lower low here. And in the bigger scheme of things, this is day 18 of this daily cycle, which topped out on day 8. So if you're keeping track, if it's day 18 and we topped out on day 8, that means we rallied for 8 days and we've already declined for 10 days. Now, 18 days is a pretty short daily cycle, so I would expect we continue to make lower lows, maybe get a little bounce, but then eventually undercut this low. And most importantly, what does that mean for the weekly cycle? So we talked about this in the last video again. We had this low on week 23, and then we had this nice swing low. So by closing above 599.36, which we are still above, we're still above 599.36, right? Let's just draw a line in the sand here so that's like very clear, right? Once price crossed above there, that was very bullish. But then we obviously retraced. You saw what happened on the daily chart. And so now we are faced with this really interesting situation. Is this a new weekly cycle, that is already topped out? Or do we get a daily cycle low and then go on to make a higher high? I'm not here to make predictions. I'm here to follow the price action. And right now, this is giving us every indication that we're in daily cycle decline. And so all we can do is wait to see where that bottoms. Obviously, it needs to bottom above here for us to have really any chance at that. But considering it's only day 18, that really kind of reduces the odds. And remember, we're gonna have tape bombs, like talk of tariffs, etc. So we could easily go careening 5-10 points, no problem on SPY, that is. And again, the monthly chart, very, very important to be aware of where we are in this long cycle, right? This is month 28. The high was last month, January, so month 27. it's not it wouldn't be crazy if this was the top, if last month was the top of this long-term cycle, right? The same way this was the top of this long-term cycle, right? At some point you get a multi-month decline, or best case scenario, a multi-month consolidation. So that's what we're on guard for. If this is a weekly cycle that literally topped out on week one, then that means you're most likely starting this long-term decline. Now, again, that doesn't mean you have to get something like this or like this. It could just be a consolidation inside a big choppy range where the market doesn't really make much progress, either to the upside or downside. Just kind of frustrating action. The rest of the indices are doing something very similar. In terms of like really specific levels, let's think about what we just did today. Again, so today we had a bona fide bearish outside candle. We made a higher high and then closed as a pretty significant lower low. And so first things first, we really need to get back above the low from this candle here. So back above 602.63, right? Getting back in that range. That would tell you that we are maybe going to play a move up to here. Probably don't get all the way to the top. But think about the way this rallied and then made a lower high, lower than this high. This rallied, made a lower high than this. When we do get a little bounce, because we will get a bounce, you would just know you have to take profit short of this, right? Like you wouldn't expect it to make a higher high above here is the idea. So that's SPY. Let's look at QQQ. It's all the same idea, just different price levels. QQQ also made a bearish outside candle. The low on this one is 522. You really need to get back above 525.74, right? That's the low from this candle. That's breaking down below that is what caused the bearish outside candle on the daily. And again, weekly, same kind of picture, same action, right? It's like the implication is this was your top. That's not unheard of. We've had weekly cycles top out on week 2, so there's no reason why it can't top out on week 1. Now, of course, the other possibility is this wasn't your weekly cycle low and we're going to make a lower low and that's going to be your weekly cycle low. Again, we're not here to make predictions. We want to watch the price action, understand what the different scenarios are. And same deal, you know, we're long in the tooth in this rally. We would expect that we're going to get a multi-month consolidation or decline. That's QQQ. What about Dow, DIA? That was one of the strongest actually. And for this guy, needs to get back above 445.39. Again, strongest of the bunch here. This one's showing, you know, if you look at this, it's helpful to cross-reference, look at the different indices against each other. This looks much more like a very clear weekly cycle low. You've got this like pretty deep retracement and then this kind of V bottom. And then this actually made a higher high on week 2. So if this is also declining into a weekly cycle low, this would be a top on week 2, which again, we have literally, like back in the bear market of 2022, we had a cycle, this one right here, that just topped out in a couple days. Well, actually, the S&P 500 topped out in a couple weeks. I think this one actually went on to make a higher high on week 3. So again, not unheard of for SPY to top out on week 1 and for the Dow to top out, in this case, on week 2. Same picture for the long-term chart on this guy as well. So that's the Dow. Look at the semiconductors. We talked about this. Let's start with the monthly chart. I mean, you don't see a monthly chart like this very often, but just keep in mind, this is all nothing but consolidation. Maybe drawing those lines makes it a little bit more helpful. We're not doing anything. On the weekly chart, same kind of idea. This is one of the most unique weekly chart formations you'll see. Look at this big gap on the weekly chart because it happened on a Monday. At some point, that's going to get filled to the upside. You want to be there for that. I don't know that that's going to happen next week, though, because look where we closed. We closed, again, same action as the indices. A bearish outside candle. You would expect some follow through there, another lower low. So that's SMH, and we've got to get back above 248.43. Otherwise, we're probably going to make a trip below 235 for SMH. What about Dixie? What is Dixie doing? So Dixie on the weekly chart. Okay, so this is a good one. Ooh, that's nice. So we got our swing high on week 16. Look at that beautiful swing high, right? We have this doji of a candle. It makes a low at 108.60, and we have closed below that. We closed below that last. We actually had already closed below that the week of January 20th. And then it looked like we were going to rebound. Again, just what does this look like to you? It's the makings of a bearish outside candle. What we would expect next week is some follow through, right? Something like this. I mean, this is definitely more of a doji candle versus solid red, but this adds to the idea that this was your weekly cycle high. So that's week 16. This is week 17, 18, 19. You know, you would expect at least another week, maybe 2 weeks of downside, right? Like, so maybe a 20, 21, 22 week cycle. Again, not making predictions here. But again, this is a nice candle that you want to see if you were playing for the weekly cycle decline. This certainly made you nervous at some point. This was a big green candle, but look where we closed. So that's the Dixie on the weekly. What about the daily? What does that mean for the daily? So the daily looked like we even made a weekly daily cycle low here. Ooh, this is good. This is good. So then that's 1, 2, 3, 4, 5. So that is a daily cycle high on day 5. Ooh, interesting. So that like lower high on the weekly chart, this guy here, multiple time frame analysis is so key. This lower high was caused by this massively ugly daily cycle high candle. Yikes. And so that means we're really early in the daily cycle decline. It's only been 4 days. We rallied for 5 days. I mean, so that means we're only on day 9. So we could easily have another few weeks of downside, which makes sense that the weekly cycle will continue to decline. So this is actually a good potential short. You could use UUP to go short. And the US 10-year Treasury is highly correlated with Dixie. It has been. And for this one, we're on week 20. We just made a lower low, but this is definitely the looks of a rebound candle. This thing would need to close the week next week above 4.6. That would make this a weekly swing low and a potential weekly cycle low. The problem is it was so correlated with Dixie, which still seems to be declining. So you would think it's still declining. I mean, we're going to have to see. We'll watch this closely because a lot of big implications here because this is most correlated with TLT. So TLT is important. TLT looks like it made a weekly cycle low back in November, and then it started this new weekly cycle, and it's now topped out. And it topped out on week 2. Here's the thing: there's two. You know, think about two competing tracks here. There's one possibility that this was a weekly cycle low, and we're now in the declining phase of a new weekly cycle. It's week 11. We topped out on week 2, so a lot of time and a lot of downside ahead potentially in terms of price and time. The other possibility, though, is this is actually the weekly cycle low here on week 36, and this is actually only week 3 instead of week 11. We're going to have to see how things play out. That is going to be very, very correlated with the US 10-year, which, again, shows that it might be bottoming. But then you have the Dixie, which shows that it's definitely not bottoming. That, to me, tips the hand in the favor of this actually being week 11, and we are in weekly cycle decline, right? Like, this is just my guess is that this is just making a lower high. We're going to see if that actually plays out. But in terms of tactical positioning, on the bull side, you really want to stay above. You really want this thing to stay above, call it 88.50, right? Like you got to stay above that. And on the and you know you're really cooking with gas if you can get a close above, let's say 89.27, because that leaves this behind as a little swing low, a little higher low than this one. So that's what you want to look for. That's TLT. Let's move to oil. We talked about how we're just playing inside a range. So we did get that lower low on the weekly. I would expect we're heading down into the 66 area. It doesn't mean it's going to collapse. We're just looking. We're probably making a trip down into the lower, below 70. TBT inversely correlated with TLT. So this one looks like it might be making a daily cycle low. It's got to stay above 35.03 for that to be the case. And that would potentially be a weekly cycle low again. So there's this, we'll have to see how things play out with the Dixie plus the US 10-year, and that's going to impact TLT and TBT. We'll move on to crypto, and then we'll do precious metals, and we'll close this out. So Bitcoin showing weakness just like the broader markets. This weekly chart, this looks like a very high and tight consolidation for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There's not much to do here, folks. It's been consolidating for 11 weeks. At some point, it's going to explode. I expect that's going to be to the upside, but we've got to be patient here. On the daily chart, oof, this thing, look at these upper wicks. Yikes. And so, just like the market careened on Monday because of the tariff news and then rebounded, look at what Bitcoin did. And ETH did a very similar thing. The thing about crypto is they tend to revisit these wicks. And so this wick is down here at 91,000. We talked about around like the high 80,000s being a make or break level. So it looks like we may get that moment of truth over the weekend. We'll see how that plays out. I'm still bullish on this long term, but short term, this is not the place I would be adding, not by any means. Wait for that swing low, my friends, and I will let you know when I see that. ETH looks even unhealthier. So for ETH, that wick is at 2150. I see this as a potential buying opportunity. Maybe this thing gets below 2000 again. Wait for the swing low. I'll definitely post on X as we're seeing that in real time. What about gold? As we talked about in the last one, we were on week 4 of the weekly cycle. We're now on week 5, still pushing higher. The problem, though, this is day 34 of the weekly, 35, excuse me, this Friday of the weekly cycle. Look at these upper wicks, these pullbacks. It's hard for it to hold the gains. I'd be careful chasing it up here. I would be very careful. But I don't think this is the 8-year cycle top. I think we still have higher to go. I'd be shocked if we don't visit that 3,000, that round 3,000 number. That's gold. In terms of like immediate risk levels, this thing has to stay above 28.34. That's the low from here. You can see kind of this cluster. A breakdown below there really signals we're probably heading into a daily cycle decline. The thing is, we're only on week 5 of the weekly cycle, so there's no reason it has to be a severe decline. Silver, very similar position. Also week 5, same kind of upper wick action. For silver, showing clearer signs this is probably the beginning of a weekly cycle, or a daily cycle decline, excuse me. You look for a close below 3176, call it in that neighborhood to really confirm that. GDX doing the same thing. This one needs a close below 4035. That would solidify that this is a swing low, or excuse me, a swing high, because we did make a higher high here. In other words, I hope you're seeing this now. You're starting to see this pattern everywhere. This candle made a higher high. It did not make a lower low. What do you think is going to happen next week? Probably that, right? And what does that do? That means these candles become a bearish outside candle of these candles. Again, doesn't mean it's all over. Daily cycle declines happen. They're unavoidable. It's a question of how shallow or deep it is and how we rebound out of it. That is GDX. This is XPD, so that's palladium. Oof. Early in the daily cycle decline, not looking good. I expect this thing to break down below 957. That's when the floodgates could really open here. And for platinum, you want to watch a move below 979. It's already formed the swing high, platinum has, by closing below, what is that, 1011. And for palladium, swing high formed below 1010. And so you watch those levels. A break above those levels means we're now potentially starting a little back up, a little uptrend. So that's the first level you're going to want to watch. And finally, let's look at natural gas. Early in the weekly cycle decline. That's the headline for this one, which is to say, not a time to step in, my friends. This week was just an inside week, right? We were just inside the range of the previous week. So the range from that week is $3.73 on the high to $3.28 on the low. We did nothing but stay in that range, which means we're most likely going to open next week as another inside week. I doubt we'll finish the week that way. So that means I'm expecting we probably going to move below 328 next week to continue this weekly cycle decline. That's natural gas. Those are all the tickers we're going to cover to wrap things up. Thanks for watching.